Welcome to another exciting episode of Real Estate Without Borders, where we dive deep into the world's most fascinating property markets. So today we are embarking on a data-driven journey across continents, comparing investment opportunities from the bustling streets of Manhattan to the tropical shores of beautiful Tulum.
In this groundbreaking analysis, we will uncover the hidden patterns in global real estate, exploring how different markets stack up against each other in terms of returns, risk, and potential. Whether you're a seasoned investor or just curious about international property markets, this episode will give you unprecedented insights into the true cost and value of owning property across borders.
Dan's thinking about having a Caesar already. He's got Caesars on the mind, spicy Caesar. I get it. But let's get ready to discover.
It's a Canadian drink you can't get anywhere else in the world, pretty much.
That's right. It's never the same anywhere else. They don't have it. It's very true.
As soon as you're traveling, you're so you get Bloody Mary with. There's no clam.
It's not the same. You need to put the clam in there, man. I don't want it. I want extra spicy.
You didn't ask me if I have
clam.
seafood allergies.
All right. So today we're going to discover which cities offer the best rental yields, where property taxes can make or break your investment, and how financing costs dramatically across different regions are affected. So let's dive into the numbers here. I know this is Dan's wheelhouse here, and find out where the smart money is moving to in today's global real estate landscape. So go for it.
The first face-off we're going to do is New York versus Toronto for a condo. Are these real units that are listed for sale? Okay, cool. So we've got, I'm going to click on this one. That one's sold. Damn, it's gone.
Honestly, on that note, I'll take over here. In Toronto, the condo market I know is in shambles. I don't want to get into it on this episode. I don't. But I have an American buyer looking to buy in Canada. We had 4 condos to see today in Toronto. 2 of 4 sold over the weekend with less than 7 days on market. Keep in mind they have a big budget looking for big space. Sorry.
I believe it. I don't know. I mean, Canadians are not the brightest folks, so they would definitely pile it into the real estate market when it's a mess.
Or for them though, it's more of a It's more they're like, I'm going to be here. I'm going to have a kid in this condo. I'm going to be here for 10 years. That's their they're not looking at like this.
Yeah, I think your first time home buyers investors are gone, but your first time home buyers are definitely back.
And upsizers.
Okay, so this unit that has sold in New York. So we're going to compare a condo at 51st Street and a condo at 251 Jarvis Street in Toronto. Purchase price is around $1.2 million for the Manhattan condo and $980,000 for the Toronto condo. Monthly rent in New York is $4,500. The monthly rent in Toronto is $3,800. Vacancy rate in Manhattan is just shy of 4%, whereas the Toronto vacancy rate is about 2%, although I'd say that's probably 3 or 4 now.
Yeah, I agree.
That data is just taking its time to catch up. Property taxes in New York, $1,925 a month. That's crazy.
Is that real?
And property tax in Toronto is $502 a month.
Let's see that. Hold on. Keep going.
Monthly carrying costs in New York, Manhattan, $250 insurance, $1,100 HOA, $200 utilities, $400 maintenance, for a total NOI of $47,100 USD per year. Carrying costs in Toronto, insurance $175, maintenance fees $850 Canadian dollars. That's your HOAs basically. Utilities $150, maintenance $300, for an NOI of $42,500 per year.
I fact checked the monthly property taxes for a condo in Manhattan. It says it does fall between $1,000 and $3,000 depending on the property's assessed value in the neighborhood, obviously.
I mean, Toronto does have impeccably low property taxes.
Interesting. I think those numbers, other than the rent's falling in Toronto right now.
Mm-hmm.
But I don't think that's too far off reality, to be honest. Interesting.
Yeah, no, I would say, I don't know. I mean, what's the bedrooms and bathrooms on that thing? For $1 million condo, that's fair. Yeah, that's probably a 2-bed.
Yeah, 3-bed, 2-bed plus den.
Yeah.
Interesting.
So let's look at that from a cap rate perspective to try and compare these side by side. They're not that far off. So in Manhattan, you're buying at a 3.93% cap rate. and in Toronto you're buying at a 4.34% cap rate.
Can we do
Roughly,
this
these are rough calculations.
just for our listeners that maybe aren't a big cap rate? Can you cover cap rate? I know we have in the past, but I think people like this. I know the people that are here because of me are going to be like, I would love to hear Dan explain cap rate.
Sure. Yeah. So cap rates are used to analyze properties side by side, right? So if you have two properties like the ones that we just looked at, and they're priced differently and their rents are different, it's hard to kind of come to a basis where you can compare them, like really create an apples to apples comparison. So we use cap rates to do that. And what it does is it basically tells you what a property is worth relative to its rental income. And so the higher a cap rate, the more rental income you're getting for every dollar of property that you buy, basically.
So can you go over how, like, a very high level, how oh, it's like you knew I was coming for you. I was going to ask you, what's like the calculation for those that are listening? How would one go ahead and calculate cap rate?
Yeah. So, and this is from the JP Morgan website. It's calculated by dividing a property's net operating income by its asset value, or the purchase price, or the list price, whatever you're using as your kind of comparison value metric. It is an assessment of the yield of a property for 1 year. For example, if a property is worth $14 million, generating $600,000 of NOI, would have a cap rate of 4.3%. That means if you can expect a roughly 4.3% annual operating cash flow, given the price paid for the property.
Now, is there? Sorry, keep going. Is there? I know it obviously vary from market to market. Well, I know it does, but off the top of your head, is there a cap rate percentage that you would be looking for if you were an investor looking to purchase? Again, I know there's no black or white answer here.
Yeah, so roughly, I mean, higher's better, but really, like, if you want to be able to scale and buy real estate with as little cash as possible, you need to be able to hold, the property needs to be able to hold debt. In order to do that, let's say at like a 75 or 80% loan to value, or maybe even less, like, in the US, some of your DSCR, debt service coverage ratio loans, which is another metric we can get into. If you're at 75 or 70% loan to value or 65% loan to value, the cap rate typically has to be higher than your interest rate on your loan to make sense, right? So that's usually kind of the best way that I would think about it is, what's the interest rate that I'm buying a rental property? Yeah. In Canada, we have our mortgages are really low because they're 5-year loans. And so you take a lot of long-term interest rate risk. You can buy a property with, 4% interest rate right now. And so you're seeing in Canada, cap rates in most of our major cities are like 4.5%. In the US, during the last couple of years, it's been same kind of thing, 4.5%, 5%. But then when the rates went up, cap rate expectations went up, because now all of a sudden people are buying properties with 7% rates in the US or 6% rates in the US, and they need 7 or 8 caps to make the numbers make sense.
Right. Last question I want to ask you, because I actually got asked this on my Instagram. Obviously we're comparing a property in the US, which is getting, paid and earning US dollars, versus Canada, paid in Canadian and earning Canadian dollars. Mm-hmm. The cap rate obviously isn't going to include that into the equation. Is there a way that, investors should be looking at this? Obviously we can get into this a bit later, but the cap rate's not going to include anything about that, would it?
No, and it couldn't really capture that, because like it's kind of like a dividend, right? Like, so if you buy like a stock, if you buy like Enbridge in Canada versus the US, like the dividend yield is the same, because if you buy it in US dollars, they're paying you in US dollars. And if you buy it in Canadian dollars, they're paying you in Canadian dollars. And so, if you buy a property in the US, you're making the assumption that you're earning the rental income on that property in the USD. And when you're purchasing the property, you're buying it with USD. And so the point in which you realize the currency issue is when you purchase the property. or currency like discrepancy is when you purchase the property and you make that conversion and you take the hit on your buying power or get the advantage on your buying power if you're buying in USD elsewhere. And then over the entire lifetime of the property, like let's say you hold it for 5 or 10 years, whatever happens to the currency, it doesn't really matter. It could matter like if you're kind of taking those incremental pieces of your, like if you're taking your rental income and converting it back to Canadian dollars or whatever other currency, then you get the lift back up. But really where it matters is after you've held the property for 10 years and you're realizing a capital gain, or you're selling the property and taking that equity back out. That's where you know, the benefit of, or the drawback of there being a currency exchange is really realized. Does that make sense?
It does. Look at I'm just taking notes. Don't mind me. I'm actually looking at the next I was analyzing the next deal.
Give me these two.
Well, they one sold again, you know, it is what it is, but it's a condo. We're going to analyze Miami versus Tulum, which kind of is an unfair side by side here. But so we have
which one has better bottle service?
I think Miami, man.
Most least Lambos per capita.
I think where's that stat? Where's the
dude? You know what car? Like, I feel like 80% of the Corvette C8s in the world have to be in Miami.
It's the cheapest, coolest looking sports car there is.
Yeah, dude. Like,
they're all over.
It's like that. Indifferentiable to like from a Lambo to like the average, like, you know what I mean? Like
take off the decals.
Yeah, take off the.
You've got everybody fooled. That's great. This condo, it's a 2-bedroom. I got it on my page here for $750,000 in Brickell, Miami. Purchase price $750,000. Monthly rent $3,600. Vacancy rate in Miami 4.2%. Property tax $656 a month. Insurance $350, which I think is maybe low. HOA $750, which is crazy high. Utilities $180, maintenance $300. Your net operating income $38,400 per year. Then you have Tulum, which it's also not showing, but I know that project. Luckily, you got it up there.
That's Miami.
3-bed. Yeah. Let's see the pictures. Between 2 and 5 p.m. when the sun hits just right. Beautiful.
It's all right. It's pretty nice spot.
You got the project in Tulum, you know, which is 4.5 million pesos, which I should know this off the top of my head. I don't.
Oh, they're San Diego Chargers fans.
Pesos to USD. Calculating. You're gonna find it.
What's that? Like a large format,
403
like
US
faux marble tile. Yeah, not for me either. It's very Miami though. You can pee on the floor if you've kind of ocean, but such a real estate broker. Oh, I can see it, man. This guy should be scalping tickets.
Comparing
you can see like center ice, man.
So that's about. There's no traffic. As long as
the windows are clean on that building,
there's no traffic here at all. Where's the price? So that's about $400,000 US. Okay. Now this project, so it's a villa. How many bedrooms? 4 bed, 4 bath. Monthly rent 75,000 pesos, which is actually probably really right. I mean, what's that? 75,000 pesos. Pesos to USD. I think I'm gonna be able to get this one too. The rent is really high here. Very, very high. Like long-term rent here is crazy.
That right?
It's about 30.
I've seen this on your gram, no? Emma model luxury villa in Aldea Zama. 5 rooms.
I think there's not that many really great places to live in Tulum, like neighborhood-wise and building-wise. So I think the really good builds do demand like a high rental price. 45 minutes. This is a render, so it's probably not built yet, I don't think, but yeah, like there's honestly not that many like really great buildings or really like well laid out. The problem in Tulum, I'm getting off topic here, but the problem in Tulum is that when they build, the developers are building everything for the thought of an investor purchasing it. So everything is like lots of bedrooms, minimal living space to maximize Airbnb returns. But if you're living here long term, it can be challenging because you don't want 4 bed. Like,
do you feel like there's
it's just
like
everything is geared to investors? So it's going to hold long term $100,000 US purchase price, about $3,700 US rent. Vacancy rate 35%. I think that's low because the occupancy rate would probably be closer to 65%. Property tax per month, that's Mexican pesos. Let's say property tax per year would probably be about $1,000 US, let's say. Insurance per month, what's that? Per year would be the same thing, about $1,000 US per year. HOA fees about so what's that? $4,000, $200 a month. HOA fees are really cheap here.
Yeah. So that works out to like a 7 cap for Tulum, 7% cap rate for Tulum. So like 585,000 over 4.5 million Mexican. And then 5.12, which is like actually really good for a Florida condo cap rate, to tell you the truth. But Florida condos are getting absolutely smoked right now because of the special assessment crisis. What? You just know I'm like just so excited to jump in, just anything just bearish. You're like, this guy's just, oh, here we go. No, so remember when that building fell down in Florida? You don't remember? There's like a building that fell down. It was built by a Canadian too, which is a crazy part. Like, dude, there's enough like old shitty buildings in Miami. So yeah. And so what it did was it prompted the government to basically make it so, change the standard so that all of these places had to get structural integrity inspections to ensure that maybe no more buildings fall over. And when they all did that, they were like, oh shit, we got to spend a bunch of money to make sure that our building also doesn't fall over. And now they have like huge repair bills. And so there's like tons of buildings where there's like special assessments for the properties that are larger than the value of the condo. And all of them are completely illiquid. Are you looking it up right now? Crazy. It really happened. I'm not faking it. Yeah. This is like hundreds of thousands per unit in Florida. Surfside condo collapse. Yeah, some condo owners have been hit with 6-figure assessments, including a 79-year-old owner who faced a $224,000 special assessment on top of monthly maintenance fees that already doubled from $1,500 to $3,000 per month, according to Local 10. Yeah, man. Yeah, well, this is not going to help them in that if they want to keep bubbling, they're going to have maybe some. You got to buy a new bubble machine. You got to buy some soap and special assessment time. Yeah, no, it's crazy. Yeah, and there was like this report that was done after just to kind of like see the impact of it, and it says listings for condos built more than 30 years ago have surged 56% year over year. So all those old shitty condos that you were saying, that it's okay if they fall over, right? Well, apparently not. And Florida has 1.1 million condo units, with 58% of them in Miami-Dade, Broward, Palm Beach, Pinellas, Collier, Sarasota, Hillsborough, and Manatee counties. So 8 counties. 65% of the condos are in the older category. And most of those are located along the waterfront. This is going to be like, this is a 20-year issue, right? Yeah, I believe it. Mm-hmm. Kind of. It's in the desert. That's cool. Come visit me. Yeah. So you want me to go into this one? So we've got, no, I haven't. No. Maybe like without the film industry and like, Target and stuff like that. I need Target, man. That's my thing. Like, so huge. Yeah. We're going to get them to sponsor the show. I don't know, just whatever. I got kids, dude. Like, you never know. Like every 5 minutes you need to go to Target to get something else. Trust me. It's crazy, man. Just wait till you start spinning kids out. You're going to be like, I get it. You will. I promise. Yeah. Okay. So you got a house in Los Angeles, West Hollywood. Oh, look, Dave, we finally got one that didn't sell. Oh no, never mind. It's sold. But we'll pull this up. It's all right. It still at least gives us a Google Street View. $850,000 US. Monthly rent, $4,000. Vacancy rate, 3.5%. Property tax, $885 a month. Monthly carrying costs, $200 insurance, $550 HOA, $150 utilities, $350 maintenance. NOI, net operating income, is about $41,800 per year. Divide that by the $850 purchase price, and we've got a 4.92% cap rate. And we'll compare that to, what's that? This is true, yeah. No, yeah, it's true. I always forget. I always forget about the base knowledge. I can't find the one that you had listed in Los Cabos, but it's a Los Cabos luxury resort condo for 8.5 million Mexican pesos. Monthly rent is 150 grand Mexican pesos. 40% seasonal vacancy. So it's, again, who knows, because most of them are Airbnb'd. Property tax about 1,400 Mexican a month. Monthly carrying costs, insurance 4,000, HOA 8,000, utilities 3,500, maintenance 5,000 for a total NOI of 1.08 million. Yeah, Mexican pesos. Divide that by the 8.5 million. You can already tell this is going to be good. 6.85% cap rate. Well, look what you're competing with. Like I tried to find the listing, and it's like the enclaves of Ritz-Carlton Reserve residence starting at 5.1 mil USD. So I mean, if you're competing in the hospitality space with the Ritz-Carltons of the world, you're gonna have a bad time. Yeah, 100%. Let's do it. Yeah, it is. Didn't I send you one from Austin, or that was one I sent you from Dallas, right? Yeah, I'm looking for it. Yeah, this is homes for sale versus Airbnbs in Austin. There are 3,300 homes for sale in Austin, and there are 12,127 Airbnbs in Austin. Interesting. Apparently, you can get a condo in Austin right now for like under 200K to live downtown. Yeah, crazy. Yeah, like look at the resale inventory. Jumped up from like, what is that, 3,000 in 2021 to over 11,000 homes for sale. Probably overbuilding, probably speculation, right? Like a lot of people leaving colder climates when work from home started to like go to warmer climates like Texas, Florida, etc. It's the same thing that's happening in Florida. And then all of a sudden their employer says, oh, hey, you have to be in the office 3 days a week. And they're like, shit, I guess I'm moving back to like whatever, New York or Boston or what, California, right? A lot of people went from California to Texas. Yeah. It's always tough to say exactly what it is, but what's that? Austin was 5.35%, so 29 grand a year divided by 550,000. Lisbon's worse, 4.5%, 21,000 divided by 480,000. Again, this is where it's easy. You don't have to convert the currencies over because you're just taking the NOI and dividing it by the purchase. Spain, that was supposed to be in, but Portugal, they got rid of their golden visa like system, or they've scaled it back because that was what was really creating problems. We'll leave that. We'll just make this like a we can do this on a quarterly basis as like rents and prices begin to change, right? Yeah, I think I can pull that up. Yeah, for sure, man. I was just trying to find those like the per square foot values, but I can't find it on the site quickly enough, so it's all good. But I gotta give you my login for the site because it's sick. I just bought it when we were on the last episode. Yeah, for sure. Okay, man. Well, yeah. I mean, I feel like this was good. This is like and I think we just do this on a maybe like every quarter. And if you're a listener and you want us to like kind of take a look at a deal, I think eventually as we grow our audience and have kind of more guests on and more listeners from around the world, we might even just do like a deal of the day segment. Like before we do it, an episode, we'll basically just like post a deal that a real estate professional has given us, maybe paid us to pump their deal, right? Better be a good one because we're going to tell people what the cap rate is. But yeah, I think that would be sick just to kind of get people again, get the reps in of like looking at, what's the cap rate in Australia? What's the cap rate in, you know what I mean? So yeah. Cool. Unreal. Okay, man. Yeah, well, I guess, yeah, we are. Yeah. Everybody else, if you're listening, Dave's checking to make sure we're still recording. Please leave us a review and send this podcast to your mom. Send it to your friends in the countries that we post it on Reddit, post it on Twitter. I don't know, whatever. Just let us know. Post it on Craigslist for all I care. I'll talk to you later.